Alright, so this is a video for 4-4, so this is a continuation of 4-1 and 4-2 using the same information. I've just flipped my paper over so that I have room for the balance sheet. So like I said in the last video, this is the balance sheet using the classified method, which essentially means that we're going to break out what is going to be paid or received soon versus what's going to be long term. So we're going to start with our header like we always do. And we're going to name it what it is. It's the balance sheet. And the only thing that is different about this, because numerically it's all the same, is just it kind of gives us a little bit more information about the company. Instead of just seeing assets all lumped together, we're able to see them broken down. Same thing with liabilities. So instead of having the two columns like we have had before, we had assets over here and liabilities and equity on the right, this is going to be one long statement similar to our adjusted trial balance over here. And remember, we're going to be capturing and picking up all these things that we've put a BS beside for balance sheet. So we're still following the accounting equation. So we're going to start with assets. And like I said, we're going to break them down with current and long term. If you watch the overview video, we talked about how current means less than 12 months and long term is greater than 12 months. So this just means that these are assets that we easily can get access to, that we're going to receive soon, that are more liquid, that sort of thing. And these will be the same ones all the time unless it's explicitly said that something has changed to long term. These current assets are always the same no matter what company it is. All things that we can use up pretty quickly. Alright, so I'm going to mark these off. Thankfully these were actually in order over here. These are our current ones, so I'm going to total them up. And I'm going to move that number over to the right. It needs a dollar sign because it's the first number in the column. And then if you remember from the video, our long-term assets we don't actually call long-term. We have a special name, which is property, plant, and equipment. And the good thing is that name actually helps us pick out those long-term things pretty easy. So in this case, we have equipment and the accumulated depreciation that goes with it. And then we start into our liability. So that's the only two we're going to be picking up. Since there is more than one, we're going to move it in the middle and then we'll take it over to the right. The accumulated depreciation, because it's a contra account, carries a credit balance. We're actually going to be subtracting. So we actually write less accumulated depreciation. And then that dollar amount will be negative. So that $1,000 will be a negative $1,000. So we have our total for this section. Now we're going to move over to the right, which is 18.1. And then we're going to get a grand total for our asset section. So we're going to add these two numbers together, which gives us 20,300. We are bringing the dollar sign back because that's an important number. And if you remember already and you're thinking about the last problem we worked, we know if our assets is 20,300, we're hopefully when we get to the very bottom going to see that our liabilities and equity also add up to 20,300. So I'm going to go directly into the next section of our balance sheet, which follows the accounting equation, which is our liabilities. We're also going to break them into current and long term. The good news is there is no special wording. We literally just call it current and long term. So if I go over here and look at our list, we have accounts payable, interest payable, and notes payable. That would be liabilities. Notes payable by default is always long-term unless it is said otherwise. So we put long-term, and these two are always current. So the reason notes payable is long-term, you can think about like if you get a note on a car, on a house, anything like that, you're going to be paying on it for several years typically. So that's why we always make the assumption that a note is long-term. So we're going to list accounts payable and interest payable. So this may be where we're going to be paying that interest on a loan, but we're going to be paying it quicker than we pay the note itself. And we're going to total those up. You can kind of see the pattern here. We're doing the same thing over and over until we get all the accounts accounted for. No special name, we just call it long term. And the only one we have is notes payable. So we're not going to have to keep it in the middle here. We can go ahead and take it all the way over to the right. And then now we can get our grand total for total liabilities, which is going to be adding up these two numbers to give us 28. And then I'm going to scoot this up just a little bit so that we can get our equity section in here. And if you remember, we formally don't just say it's equity, it is stockholders' equity. So all the owners of a corporation are stockholders, investors. So now we're going to go pick out these things that we have left. So we have common stock left. And it is 10,500. And if you look, and if you've been keeping up a little bit better than I have, everything on this adjusted trial balance we have used and marked off. There's one piece of equity that is left. This is where you remember that your order of the financial statements are important. And we're going to get that number from your statement of retained earnings. So you can flip over or scoot your paper over if you wrote on a different paper and get your ending balance for retained earnings. And that ending balance was $7,000 for the end of December. So of course we need a total. Gives us 17,500. And now we're going to add up our liabilities and equity together just like the accounting equation. And like I said, we hope that it equals 20,300. And if we look, 19, 1 is 23. Remember, double underline, bring back the dollar sign. These do indeed match, which is what we were looking for. So this is your completed balance sheet using the classified format. And that's the end of the video for problem 4-4.